Andrew Holland, the Chief Executive Officer at Avendus Capital. And the case for the chat today is the time that we are in, where markets are hunting for the next big trigger. We're at a time when markets have touched new highs. This was expected, but the momentum, in a sense, is missing. The breadth or the move that is pushing the markets towards the next big leap is, in a sense, missing. Markets are hunting for the next big trigger. Is it going to be an election year, considering that election results are being priced in? Corporate results are good, but what next? The biggest question, is the Fed movement going to turn out to be the biggest headwind of the year? We're going to be talking about all this and more, and also asking Andrew about the stocks and sectors that he would continue to bet on. Andrew, welcome to the show. Absolutely fantastic to speak with you on Talking Point and get your take on what is a slightly confusing time in the markets. We're seeing range-bound trade, volatile trade, but the large direction is definitely trending upwards. Let's begin with the importance of global cues at this point. Do you think that this is still a market which in the medium term will be directed by what the Fed does and what US market does?
Well, first of all, Tamanna, thank you for the opportunity. I think we've been thinking that the Fed is leading the way, but despite the fact that now we could be waiting longer for interest rates to fall, the market's just looking through it. So I'm not sure the Fed is giving the direction to the markets. The market's giving directions to the Fed and saying, listen, it's okay, don't reduce rates so quickly because earnings growth will be good. The recession or hard landing, which the market was possibly anticipating, isn't going to come. So that Goldilocks scenario of lower inflation or trending lower inflation, rates, yes, will be lower, but earnings growth will be there, is a narrative which is being played out, not just in the US, but across global markets. I mean, it's interesting, right? You have the US where it's probably growing at real GDP growth of, say, 1.5%, 1.7%. Not great, but okay. UK, Europe, particularly Germany, in technical recessions. Same with Japan. But all markets kind of towards new highs. And then there's that dichotomy in terms of central banks. Everyone's raised rates. Japan didn't raise rates. But the market's getting towards that three-decade high. Which hasn't been seen, for so long. So I don't know which central bank's getting it right anymore. Is it the Fed? Is it the Japanese? Is it the UK or the European Union?
Andrew, may I hazard a guess on if China is getting it right? Today, China has cut its 5-year rate, its benchmark lending rate, to 3.95%. It's the first cut since June. Now, do you think China or the Chinese central bank in that sense is ahead of the curve?
No, I think the Chinese central bank has to do everything possible to get some comfort for investors behind the property market, because obviously that's been having a devastating effect on the economy and confidence. So therefore, if they can shore up the property market, and of course they're trying to do that with the equity markets too, then you have a very cheap market. So if they can continue to kind of, I'd like them to do more of a big bazooka in terms of monetary policy to get that comfort back. But at the moment, no one wants to be in China. Everyone thinks it's cheap, but they need this trigger on the property market, and this is the start of what the central bank is doing there. So that's the good news. And that's good news for emerging markets, because all the outflows that we've been seeing have been related to China, which has obviously impacted India's flows as well. So if we see more confidence coming back to the Chinese market, then we'll get flows in emerging markets, and India will pick up a large portion of that too.
Let me talk about flows in the Indian context. So December 23 was an outlier in a sense. That's generally when everyone's on holiday and you don't really expect flows to come in. that's not what we quite saw. We saw aggressive flows coming in. Now just look at Feb, when you've seen outflows from FPIs for about 14,000 odd crores. You're seeing markets touch new levels, but without the sort of tailwind of an FII or FPI inflow. Do you think that changes at some point, and that's when you see the next phase of bull run in the Indian markets?
You know, it's a good question. I think that relates to what I've just said, Tamanna, in terms of that if you get flows into emerging markets, because China's now seen to be, kind of have bottomed out in terms of the property market and the stock market, then you will get flows coming into emerging markets, and some of that will, come towards India as well. The problem for India is that valuations, whilst they're not killing, but they're not so attractive if you compare it to China. So we will get some flows. So that would be the extra leg. But the question now is the market pricing in the kind of the fact that the elections seem to be in the bag for the ruling government, and we'll probably see a run up to that in March. But then thereafter, what do we have to? To May, and then what after that? What's going to be the catalyst to get the market going? And I think that's going to be the question we all have, because the market is just pushing itself higher on the basis that all of the good news is going to come through, and then it's really what next? And I think that's going to be the difficult time for the market.
Just talking about the pre-election rally and what that picture looks like. So since you had the three state elections in December last year, November last year, that continuation or the continuation of policy and the same government coming back was priced in. Now the question is how high, how comfortably, and which is really now an arithmetic exercise more than anything else. My question is, what does it mean in terms of capex? What does it mean in terms of the PSU rally we've been seeing? What does it mean in terms of more opportunities for companies in renewable energy, in railways, in defense? Do you think very clear, comfortable win at the end of the day translates into all of these clear opportunities where you can drill down to a sector that works and a stock that works?
The sectors you mentioned. So let's just we do know that the government will spend on infrastructure. We know it's going to spend on defence and renewables. So that's a global factor. It's not just an India factor. So those are clearly industries which are going to continue to receive very strong orders going forward. Of course, execution is going to be key in that as well. But I think the market will price that in as we come towards the elections, and these stocks will continue to do well. I still think they have a long runway, so I'm less worried about the kind of the valuations in these kind of sectors at this time. I think what we have to look for, Tamanna, is what could upset the apple cart, after the elections are over. And I was at a conference yesterday, and the Kotak conference, and Uday Kotak spoke there. So I'll quote him, which is quite interesting. What he said was that, in the kind of the growth that India is expecting, it can't just be a one-legged race in terms of just equity markets. Therefore, the bond markets have to play a big role in the funding going forward. And what he said was that the differential between bond taxation, which is around 40%, and some of the equity taxation, and you mentioned ELS and arbitrage, is 10%. They said that gap is too large. So maybe that expectation of some kind of change in capital gains tax for equities could be something that we'll see after the elections, and maybe the markets might not like that.
Yeah, that's one of those things that makes it from one budget list to the next budget list every year, to be honest, Andrew. Capital gains tax, will there be inheritance tax? Will there be any leeway there? One would argue that this government doesn't really need to change anything. There is no compulsion they have to change anything, or to hold back their hand if it comes to taxation. I just want to get your take on the pre-market rally. You said from March onwards we may see a pre-election rally, and I was just looking at the data. And I'll start from 2014, which was term one for this government. You had 3 months before the elections a 15% jump up. Before the 2019 elections, it was 8% jump up. My question to you is, are we going to see that pre-election rally muted, considering that the result is now priced in once again? What exactly are you rallying up for?
I think you're going to be rallying up on terms of that the policy continuation and the government spending will move very quickly after the elections, and obviously there could be bigger reforms going forward which will excite the market. What those reforms we'll have to wait and see, and taxation is one of them, Tamanna. I wouldn't rule it out this time in terms of equity taxation at all. So I think those are the kind of reforms which could happen, which will help fund. You've got to fund this economy, right? At some point, it can't just be the government all the time. Private capex needs to come in. So if you had that kind of a rally, our forecast for this year, sorry, when I say this year, FY25, is that earnings growth should be up around 15%. And we think the market gains will be similar, around 15%. So if you've had that 15% before May, there's nothing to go for in the second half of the year. That's for sure. So there could be some disappointment in terms of expectations thereafter. The only thing that would change it, Tamanna, in terms of moving that 15, maybe to 20, is two things. One, the realization that China has bottomed out. And you're getting flows into emerging markets, which India will get some of that. And two, that earnings growth starts to accelerate towards the back end of 2024 into 25, and that 15% earnings growth becomes nearer to 20%. So those are the only two factors which would propel the market higher. To my view, the other factor which could help is obviously if the RBI starts reducing interest rates, which will obviously be very helpful for the banking industry, which is struggling anyway in terms of NIMs, and that being a large weightage in the index could be the rally point for the market.
So that's, I suppose, in terms of immediacy, an RBI rate cut could come earlier, or could be the next big sort of movement for the markets in terms of what happens with financials. But talking about corporate results, because you referred to them, were you happy with Q3 in terms of the performance of these companies? Because a lot of sectors, a lot of stocks have run up on expectations, especially in the PSU space. And the Q3 numbers was an opportunity to examine whether the business prospect is that solid. What was your sense on that end?
Yeah, apart from certain companies, I don't think there was any real big surprises. The only thing that I'm seeing now, Tamanna, is that it's not that earnings are being upgraded so much. It's target prices have been reached, and therefore target prices are being raised, not on the basis of earnings growth. So, or earnings, kind of upgrades. So that's a little bit worrying, because I think, the street is trying to say, we can push PEs to a higher level because something will come through in the next 1 year to increase earnings, but it's not happening. So I'm a little bit skeptical in terms of the share price targets rather than the earnings growth of a lot of companies. So what I would say is that whilst earnings growth is going to be important, I don't think we've seen, if you take the banking sector, it wasn't a great year. I'd say quarter. So there's still a lot of headwinds for the banking sector in the very short term. So increasing price targets doesn't really work for me. I think there's interesting. I mean, not as though I'm commenting on the stock itself, but Coal India, I think, came out with a forecast saying that prices are starting to kind of fall. But of course, most of the streets, so that's okay because volume will pick up. I don't get it. So these are the kind of things that happen in a euphoric market where prices, share price targets become too high.
I'm going to come back to you on that and drill down a little on that, Andrew, because it's truly astonishing. You're talking about a Coal India. Let's talk about a 197. They've pretty much, their business model has been cut off. The blood supply has been cut off, but you have house views that, let's up the target price. And then a lot of disparate views coming in. Do you think that's a symptom of a bull market where you're looking for an opportunity, or you're looking for hope against hope for the target price to go up?
Well, I mean, again, I've seen reports, with share prices half of where it is today, and share prices are 50% higher where it is today. So someone's going to be right somewhere. I think on these kind of regulatory, kind of decisions from the RBI, it's always better to wait till the dust settles, and in terms of what the real business model will be going forward, because I think we're all grappling in the dark a little bit. In terms of what the outcomes will be, and how the RBI will react going forward. So I think there's still a distance to go before we have all the full evidence of what's going to happen here. But I think on terms of rather than individual stocks, so I talk about PSUs. I've seen a lot of kind of research reports saying this is the time and it's all changed and there's better governance and so forth and so on. I think for certain companies that's the case, but I don't think it's for all. So I think we're taking again a viewpoint that just because a stock rallies or a certain section of the market rallies, that everything is the same for everybody, and it's just not the case.
Yeah. So research reports maybe should be taken with a pinch of salt. Would it be fair to sum up, Andrew, what you're saying like that?
Well, being an ex-research analyst, of course, I'd not say that. But I'm just saying this is how the market narrative changes.
Yeah.
And I'm not, it's been a great rally. Don't get me wrong, and I think everyone's scratching their head a little bit of how they missed it. But it goes back to when the market's where they are at the moment, and I'm not saying there won't be a pre-election rally, but when you arrive late at a party but all the good stuff has already been eaten or drank. And you're kind of left with some of I'm not saying the scraps, but some of the leftovers. That's where I'm feeling at the moment. I just don't want to kind of push into this market so aggressively, when a lot of the gains have already been made, individual stocks rather than just the indices.
What a great analogy to end at. Are you late to the party, and are you just left with scraps where there's been a massive run-up? In that sense, how you pick the best bits becomes very, very crucial. Thank you so much, Andrew Holland. Pleasure, as always, to speak with you.